I'm playing with the cowbell. That was meant to be live.
Yeah, I know. I was counting down 3, 2, 1. Vitaly was like, "No, we don't need a countdown because that's not appropriate." But
Time to bring out.
Okay. Whatever.
Oh.
Welcome everybody to Finance Junkies. This is another episode on this Sunday. Let's go around the room. What'd you guys have for dinner? Vitaly, what'd you eat today?
Oh my God. I forgot the restaurant. Chris something. You know the steakhouse? Chris something. It's a pretty fancy chain of a steakhouse, but it's expensive. I didn't know how expensive it was until I got that bill though.
How much was the bill?
I'm not gonna say. Don't worry about it, man.
Okay, all right.
But
You
it
were
was
flexing
really
that it's expensive. I was like, you could flex how much
you
the bill
don't
is.
got to tell it, but it was really good. Actually, the food was really well prepared. It's one bill I actually didn't mind paying because when they do it right, it's okay. But when it's a bad meal and you're paying too much, that's when it hurts.
Okay, Chris.
I had this place. I don't know if you've ever had it. It's a Mediterranean. It's called Cava. They're like really good. Yeah, it's really good. They're IPOing sometime next year. I think maybe this year. So I may actually buy some of their shares in Cava. Basically, it's very reminiscent to Chipotle, but for Mediterranean food. It's freaking delicious.
All right, I'm buying puts on that one.
I was gonna say that's when your puts expire.
You wish you had bought some puts on Enphase.
No, and we'll talk about it.
Watchers.
No, I don't. Okay.
On
Weight Watchers,
had
that's what I should have puts on.
I had fish and rice. Carlos, what'd you have?
I cooked for myself. I just made I actually had a late breakfast. I haven't eaten dinner yet.
It's
really
6:30 where you are. What breakfast?
I'm saying I cooked for myself today when I got up. I just made myself some nice just eggs, sausages,
Basic
pasta,
stuff.
whatever, the bread, all that stuff.
Okay, cool. Now that we got the basic small talk out of the window,
now that everyone's left, all of them are proud of you.
now that everyone's like, "Why the fuck did I click on this stupid podcast?"
All right, so
leave a
Jason
comment below with what you ate for.
Yeah. Jason is commenting. Chicken and broccoli from Chinese spot in town. There you go.
There we go.
Eggplant pizza salad. Yeah, that's great.
Yeah, everybody should put it down over there. We'll discuss this all night.
All right, so I'm officially a shareholder in Enphase.
Good job, man.
I bought the stock.
You didn't buy any puts on it? You didn't buy the puts first?
I didn't buy puts on it. But why is it dropping from 200 to 180? What's going on?
Because you bought it.
Yeah,
I bought it, of course, because I bought it, so that's why it's going down.
Well, as Chris would say, there's no demand. So let's start with there. As Chris
here's a better question: am I gonna regret buying Enphase at 180?
Oh yeah, probably.
So why did you tell me to buy it?
Wait. What was your buying? What price did you get it at?
I got it like 192, 190, 183. I got like 15 shares. Just
okay.
Add that there.
You know why you'll regret it? Because you got paper hands. Okay, that's why you're gonna regret it.
No, I'm holding this one, and this is you.
I mean, you say that. You say that now.
He's got paper hands.
Now.
I'm holding this one for you in particular because if I lose money on this, I get to blame you
Come
forever.
to me. Okay, I
because
got
you are so confident on this one.
Listen, when Enphase goes down, I actually literally smile. Like I was like a giddy pig in shit. Basically, when it went down to one, I was buying it from 220 actually all the way down. I'm going heavier and heavier as it goes down. I am super excited that the stock market gives us opportunities every couple of years to buy high quality companies at good prices. Okay. So the lower this goes, the better it gets, not the worse. This is what people don't understand. When something that is valuable, that makes money, that is profitable goes down, you're supposed to learn how to buy more of it. And I think Chris,
why is it dropping?
That part, right? Chris, you get that part at a certain price.
I get it.
It's appealing to Chris. Like, I think he said 150. It's very appealing to him.
150 would make sense. Yeah.
So my point is, if Chris is willing to buy it at 150, that's the bear talking, right? That's the bear telling you that it's worth 150. We're at 183. Okay. So if the bear's almost ready to buy, how far is the bottom away?
Do you think we get to 150? I don't know if we get to 150.
Oh no, it's possible because look, I still think the Fed sort of might be doing another rug pull. We don't know. We don't know what's happening. The banking thing obviously put that to the side, but I would think to show force, there's still going to be some sort of a raise, whether it's a quarter point or not. And to me, that doesn't matter. But if it affects the interim, price of Enphase and companies I like, why wouldn't I take advantage of those? And I think even Chris had a great tweet about taking advantage of he wants all these paper-handed mofos to go sell everything because he's ready to buy. And I'm surprised how bullish you're getting because I've been reading your Twitter, and this guy is going full bull. He's basically like, I am like, if you don't have money in this market right now, something's wrong with you. Okay.
Mhm.
If this guy is saying it, and remember when we started this like 6 months ago, whenever, he was not saying that.
That is true. That is true.
it's
Chris,
time to
you want to talk about why you're so bullish, Chris?
Yeah, I think the data's pointing towards a very deflationary standpoint. I think the Fed is always late to the party, right? So they were late when it came to inflation. Now they're late to deflation. Like you can see deflation coming everywhere. So what do you want to be in when things start going deflationary and the Fed has to cut back on rates? You want to go into areas where there's opportunity. And the only reason why, look, I'm not disagreeing with you on regards to Enphase. I think it's after really looking at like the market itself and everything, I think it's a really good company. It's going to do very well for itself. The only thing is there's a lot of other opportunities in the market right now that are a lot more compelling for the amount of risk that I'm taking, right? So I would say
unlikely.
Well, we could talk about that because right now Enphase's PE is still in like 66, like it's
40
still
forward, 40 forward PE right
that's
now.
That's forward 40,
70% growth.
Right.
You're telling me that's expensive? This is what you're
Right.
saying?
It's expensive relatively to the safety that other
It's cheaper than
companies can
Tesla on a
provide.
PE basis, and it's growing faster than Tesla.
Right. But there's a couple of extrinsic factors that are also playing into it. Like one thing for me is that I'm looking at it from a macro standpoint, where it's like the higher interest rates, how are they going to affect consumers wanting to switch to solar? Because at the end of the day, you have to finance solar somehow, right? So if there is a slowdown in demand for Enphase coming next year, which can happen, and I don't think it's going to drop off the map, it can drop a little bit, but that means that there will be an opportunity where the valuation goes even further down, in which case that's when it's a good time to add. So for me, my entry price, as I told you guys, was about 150. I think at a 150, the rate of return is much better. It's a much better compelling argument to make. It was the same concept when Facebook fell down. That was like, oh my God, like, dude, you're getting something that's on sale that's still amazing when it came to its earnings potential, its cash flow. Google, it was the same thing when it went down into the 90s. Amazon, you're starting to see the same thing. So there's a lot of great companies right now that can weather this storm, who have the cash flow to weather it very well, that I think, if you want, you should be dipping your toes into the market. Like, I think when CNBC tells you, oh my God, you should be watching out, blah, 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 that's when you should be questioning yourself. Like, what is the motivation behind these people saying sell everything versus when they're saying you should buy everything? Like, usually they try to lead the herd in a certain direction. And the best way to make money is to follow the opposite direction that the herd is following. Like, look at the Jim Cramers of the world. Like, if you had just done the opposite of what Jim Cramer says, you would have had a much better return. And he's supposedly one of the insiders with inside knowledge. He talks to CEOs of the company. So it just goes to show that there's a little bit of bias on the investment community to lead the herd in a certain direction. And the best way is to do the opposite and to also be a little bit first. There's a quote that I'll tell you guys. I just have to look it up real quick. But yeah, Carlos, what do you think?
I think he did call the Bitcoin top, though. I'm saying Kramer.
Kramer?
Yeah, I think he called it, sold his Bitcoin, and paid off his house. That was like his only trade.
I
But
think,
Kramer's
he sold
allowed to sell
Ethereum.
crypto?
He sold, he has some, at least
he
he
bought some
claimed to
crypto.
have Ethereum. Yeah.
I think December of the year before, and then when it ran up to 70,000, I think that's when he sold at the top. He only bought a little bit, according, this is what he said in a segment on air, and then he ended up paying off his house.
I don't think it was at the top. It was like,
Kramer
I remember,
Kramer
45, 50 grand. It was still high.
I thought he was higher than that. I thought he was in the 60s when he caught it. But he was,
Kramer gets paid,
right? He was, because he was thinking that it's like a security, right, that had gone up in so much in value. He just bailed out of it. So maybe he inadvertently bought the top. And I'm not the
Kramer gets paid $12 million a year. Why is he concerned about paying off his house?
Well, the bigger question is how much was his house?
Crazy question is that his house could be a $30 million house. Like,
exactly.
Who has a $30 million house? I don't know.
Who has a $30 million
in New York? In New York City?
Are you crazy? An apartment costs $30 million.
Your income. Just think about the value of your own home to your own.
Yeah, you got to be crazy, dude. Lots of people have a lot of money in New York, and Kramer's one of them.
Okay,
he does.
Yeah. Carlos, did you buy Enphase when it dipped?
I did not buy Enphase. This is. I was thinking about this today when I was in the shower. Part of the
he wasn't masturbating. He was thinking about Enphase.
He was masturbating to Enphase.
Not like you. You've got Trading View there.
No, I'm just
a water.
that's my shower experience.
No, I was thinking about it like
Oh my God.
a lot of what I'm invested in are in similar sectors, right? So if Enphase is doing well, or if Tesla's doing well, Enphase is likely doing well, or when those industries are hit. So for me, I have been focusing mostly on Tesla and Bitcoin as of recently. But yeah, Enphase is starting to look it's starting to get into that desirable zone. I mean, look, I'm just looking at charts while we're talking. I don't know that we're going to see 150 in Enphase. I mean, 150 in Enphase
That's why I bought. I didn't think we were
150 in Enphase is a May 2022 price. That's 3 quarters we've had of reporting, and they've continued to beat. I don't know that we get down to those levels. I don't know if there's enough paper hands for that. So I think, yeah, like you're saying, 180, maybe 170.
No, I mean, in the charts, if I was to bring up a chart, maybe we do that a little bit.
Bring it up. No, bring it up, because that's what I'm looking at. I'm looking at, are people going to pay? Are people going to allow it to tank to May 2020?
If it gets to 150, it would be at like a 30 PE at that point. 30.
Just by the way, at 150,
like
at 150, just FYI, my dividend portfolio, which is sizable, I've told you that before, gets converted to Enphase. Okay, my other spec plays like Google get converted to Enphase.
Wait,
so
it's at 150?
Said at 150, yes. Anything under 150.
Wait. So that means you would sell
market cap now. The reason why is because at 150, considering the last
it's an easy double, just easy double for me.
So ridiculously undervalued for what that stock should be. You could argue it's overvalued in the industry, but for that stock,
I don't need AT&T when Enphase is 150. I don't need it in my dividend portfolio. So my dividend portfolio will be totally crushed at 150 and under. Obviously, I do want to save some money if it does fall to stupid prices, because the market can be stupid. I understand that. It can go to $100. Like everybody who's in our Discord who thinks that it cannot ever go there. Look, we saw Tesla drop to $100 and lose 70% of its market cap. Why can't Enphase lose 70% or more of their market cap?
Because Tesla's tanking to 100 was a few things piling up. It was the Elon Musk Twitter acquisition.
I agree there.
Thinking he's a conservative now. It was lashing against that. It was also extremely highly valued. Enphase doesn't really have that sort of thing. It's like they just want to look at the numbers.
I know, but you know what I'm saying? That I would like to have a little bit of
about the Clintons, or Epstein's client list.
No. Definitely Enphase doesn't have the same issues because Badri, the CEO, is very quiet.
Yeah.
A good Indian CEO that's not causing any problems for his investors and his investor base, like Elon Musk, obviously. But having said that, if the market thinks that we can get to this in a bit, but if oil is being totally trashed and Enphase is trading with energy, which is possible, right? Then why can't it go down? I've always been of the opinion that Enphase can go to $100 again. It went to 116 last time, if you guys remember. I don't know if you've been watching the charts, but even that was kind of shocking. Now they've had all these positive quarters, but if oil is trading down and it goes lower and lower, and it's the opposite of what everybody thought, and inflation is really coming down, and everybody thinks we're going back to gas cars. This is stupid, of course, but this is what the Wall Street might think, that Enphase can get creamed. Its PE can get smashed, just like Tesla, right? Under 30, and it'll be the biggest buying opportunity in the market, in my opinion. Like for the next several years.
Yes, it's also possible it could go to 50, but what's the probability of that? Like, let's be honest.
So how much was this buyback at 155? Do you guys know?
They've been buying under $200. So
but how much was the buyback? How many billions did they buy?
I think Johnny Boy in the comments, he might tell us how much it was. I don't remember exactly how much they bought back.
To be honest, I'm seeing more value in Enevix, and I'm starting to see insider buying in Enevix by TJ Rogers, by the new CEO. I looked at the profile of the new CEO that they hired, and this guy's a killer. He knows what he's doing. I reached out to a few people that I know. It's like, dude, this guy knows what he's talking about. He knows what he's doing. Like, if you're looking for us, because you remember, each CEO has a personality profile that lends to their ability for a company. Some CEOs are good at maintaining businesses. Some CEOs are good at growing businesses. Some are specifically brought in to scale production on a certain item, right? So if you're trying to scale up, there are certain people that can do it really well. And the guy that they brought in, specifically Raja Talluri, he does that. That's his niche. So if they brought him in, and I started to see that basically at this point, the battery tech is proven. The only thing that's the missing key component is the scalability, so that the mass production.
Before we get to Bitcoin, can we get a 10-minute preview on what Enevix is? Anyone? Because I don't really know it.
Okay, so Enevix is a battery technology company that's specifically working with TJ Rogers. These guys sent me the video on it. I checked it out. I checked out the company. Their technology is
Which video did you watch?
the
his
one where
presentation?
his presentation where he
TJ
does all the
Rogers.
demonstration. Yeah.
We're-
And so one of the really cool things was the puncture test. So basically batteries right now, one of the biggest problems is that there is a huge problem with regards to thermal runaway if anything happens in terms of the battery for punctures. And the minute that battery is punctured, that thermal runaway can cause catastrophic failure in the entire car. And it's really bad. I didn't know how big this thermal runaway problem is, but it's starting to be.
Not car. They're
but
not
it-
using their batteries in cars.
Huh?
You mean
What?
in the phone, not in the car. You said a car.
No, I know, but that's what I'm saying. That overall thermal
cars too.
runaway,
With
thermal
lithium.
thermal runaway is a big problem. Whether it be phones or cars or whatever, batteries in general. The minute you puncture them, they can have thermal runaway issues, right? So one of the issues right now is that their battery tech can actually help eliminate that because of the way that they're designed. The other thing is the way that they're actually produced gives you a much higher density and also I think faster charging.
It's
And
because
there's
they
other
use
benefits.
silicone for the anode, and they
Right.
can use 100% silicone, not just partially. I'm
Yeah.
not a battery expert, but basically nobody can really do this right now
Yeah.
because of the whole batteries expand out, and that's how they basically explode and catch on fire.
Yeah.
So they're controlling that from ever growing too big. I think there's a 10% growth that happens over batteries for their battery, but other batteries that get bigger might actually pop and explode and cause a thermal runaway.
Hold on. This is for EVs only.
No.
No,
Right now,
no.
this is for smartwatches, phones, laptops. This is what they're working on.
Mostly for
And
portable.
hold on. So why is this so needed? Because I haven't heard that many stories of things that are.
Well,
powered by
why do you
batteries
need
exploding.
batteries that have higher density that last longer? You tell me.
Well, think about it it's for small portable devices, right?
No, I know,
Batteries
but
have
I
longer
like
life.
like the iPhone 14 compared to the iPhone 1 in 2007.
Right.
Battery life significantly increased.
Yeah.
And I think 1 in every million maybe blow up. So what exactly?
Well, it
is
was
the
a bigger
demand?
issue. You remember the Samsung phones, the Galaxy phones?
Yeah,
that
but those are an
exploded?
anomaly.
They weren't
It's
allowed
like-
in Congress. They weren't allowed on planes, right? So this
Is this that big of an issue? Is my question. Because I
No,
don't
it's
get
not that big
as
of an
an
issue.
outsider, I don't see the
Well,
use case.
you
So-
gotta think like the manufacturer. It's an issue for them because the liability is on them. So for you, 1 in a million that doesn't affect you. But Samsung, hundreds of millions of dollars get ruined as opposed to they can just buy a better battery that doesn't explode.
Right.
Which one would you buy? Would you
Yeah,
buy the
but if
better
it's
battery
1
that
in a
doesn't
million
explode?
for the consumer, I'm
And-
just
and
concerned how much is the
Amit,
growth.
This is not for the consumer. They're not buying this battery.
And Amit, one other thing is when it comes to these batteries, when it comes to cell phones and stuff and small portable electronics, thermal runaway is not a big issue because rarely will you see it being penetrated like that. The minute you go into the EV segment, which is what they're eventually going to be moving into with high volume production, that's where it becomes absolutely necessary because guess what cars are? They're just giant bumper cars waiting to hit each other. If you have
Okay,
an
so
EV
but Teslas don't blow up like that. So you're saying as Teslas
what are you
get-
talking about?
What do you
Yes,
mean?
they
Of course
do.
they do.
How
Of course they
how
do.
many per every 1,000 blow
A
up?
lot.
Well,
Ask-
well,
ask
No.
Volkswagen.
It's a small percentage of EVs overall. You're right
That's what I'm
about
saying.
that.
But no,
But-
but your bull case is that as Teslas get more advanced and as we need even higher miles per range on these
No,
batteries,
it's just there's
then-
more EVs. There's going to be more fires, so they want to limit it. If you have a technology that is better, has more energy density. We're also forget about the fires for a second. There's more energy density in the battery. That means you can actually last longer on a portable device. That's the main thing. The other driver is not just the energy density, it's also the fact that they don't explode on you. That's also important, by the way, for like Samsung, because they've been through this. And Apple doesn't want this nightmare.
One
Ever.
thing, look at Futtbucker's comments in the section. I'm in the comment section. He's actually no. The guy is a firefighter. The guy's a firefighter in New York. So he
Futtbucker's a
sees this.
firefighter? Oh, geez.
Yeah.
How
Yeah,
many?
look at the profile picture. Yeah.
Guess how many e-bike fires we've been having in New York, and mine will be.
How many
700 a
How many
month.
butts have you fucked? How many buckers have you? How many buckers have you? Wait.
So
How many
okay,
bucks have you fucked?
let's talk about the
How many fucks have you butted? No.
Stop, guy. Are the fundamentals of this company at all good? Is the market cap good? Is the price to sales good? Is it?
I mean, why don't you bring
No.
up a chart and
No.
take a look? No, but this is part of it. Bring up a chart and take a look.
This is a very highly speculative company. because it's still technically pre-revenue because they're not generating a lot of revenue. Right now, they're still in research and development phase. But that's exactly where you want to invest, where you have an outsized return for investing a little bit of capital.
Yeah.
So by the way, yes, it's a speculative bet that you can say would outperform Enphase in the long term if they manage to scale and do everything they're doing, of course, because they can have an Enphase moment that shoots them off to the moon. But you left Enphase, but you're talking about Enphase now is $25 billion, and they're supposed to be changing the world. Like, you can't be $25 billion and change the world. It just doesn't. It's not the way the world works anymore. So you need to be multiple hundreds of billions of dollars at least, and it's only 3% penetration or 4% for solar. I know you left to go to Enevix, and we'll come back, but it is not a better investment than Enphase. Enphase is the clear winner in terms of an investment that'll give you a good return. If you want, meaning a more guaranteed return, if there is such a thing. But if you want a speculative bet that will outperform someone like Tesla or Enphase, yes, Enevix is there. And that's why me and Carlos actually do have positions in it.
Yeah.
Not big positions, but I think I've said them on our podcast. I have multiple thousand shares now. I'm not sure what Carlos has said, what he has, but anyone who wants to check it out.
I have some. I bought some speculatively.
Chris has some, and I think I texted him in actually a couple of days ago. I said, Chris, you really should just buy a couple of shares of this Enevix in case it does blow up.
Yeah. Yeah, I have a few thousand.
I think I told you that.
I have a few thousand shares.
I have limited funds, and I'm trying to be responsible here. But
no,
that's why Enphase was more exciting.
So when you're trying to be responsible, what are you?
He's buying
Palantir.
Oh man,
he's buying SoFi and Palantir. He's trying to be responsible.
Dumbing down.
Well, look, bro, I brought 15 shares of Enphase. I got like the fucking. Well,
that's your one good company. What are your others? Like, you don't have any others.
That's what you do.
Tesla. I've got Tesla.
Okay,
right.
Got 12 shares of it, but nonetheless. Okay, so 20 minutes into the pod, it's time we address what's going on in the world that actually matters.
What? We're leaving these great topics?
We're leaving these great topics because we got to talk about the real big issue. Do you guys know a guy named Balaji Srivansan?
Why does that name sound familiar?
He was former CTO at Coinbase, right?
No, why'd you say it? I wanted Carlos and Vitaly to get Carlos and Vitaly. How do you guys?
Yes,
love
I do.
And you don't know this guy.
No, I do. He's the CTO who went all into Bitcoin, right?
Yeah.
I mean, I don't know if he's all, well, he probably owned. Basically, he has said, and Chris can summarize this as well, that what's going on with the banking crisis and the Fed is abhorrent, it is manipulated, it is intentional, and the $300 billion we just had to put on the M2 money supply is causing the devaluation of the dollar because we are now vertically printing. He has made a prediction that in the next 90 days, Bitcoin will reach $1 million. And he's betting with someone that Bitcoin will go to $1 million, kind of as like a marketing scheme to get people to really realize how bad the things are in terms of monetary policy.
Well, Carlos, me and you are done then. So I think we're retiring in 90 days.
If that happens, you will never see me again. Like,
I don't think you'll see me as well. This podcast is over.
I'm dead serious. I'm dead serious. If Bitcoin would have hit $1 million in 90 days.
Anyway,
my Instagram and like my Facebook, just delete it. You won't know where to find me, but I'll be in Mykonos.
Basically, he's saying we will have hyperinflation in the United States, which will mean digital gold is the only other place people will run to in order to save themselves.
Do you remember Robert Kiyosaki, which you told me was a moron?
Yes.
This guy's a similar idiot. I mean, he could be making bank right now because crypto's pumping. That's fine, and I have crypto. I'm happy it's pumping. It's completely idiotic.
I know that's also to say it's not going to happen. I mean, just calculate what the market cap of Bitcoin needs to be. Go to CoinMarketCap.
It'd be 20 trillion if it gets to $1 million.
Okay, so where's this $20 trillion going to come from, brother? It doesn't just go there overnight.
Devaluation of the dollar.
No.
Money gets
Carlos. That's not the way market caps work. Okay, tomorrow, if someone buys a Bitcoin for $1 million, the market cap is $20 trillion.
Yeah, but if someone buys it at $1 million,
okay, if some idiot on the open exchange buys it for $1 million, it's $20 trillion. That's how market cap works. Yeah. So, but the problem is there's not going to be 1 million people buying it for $1 million. That's the problem.
That's the point.
Because I will sell everything at that point. I am out.
But why would you sell it for dollars that are hyperinflated?
It's $1 million.
Why would I sell it for? Because those hyperinflated dollars will still buy me a house. Okay. I don't believe any of this is happening. So this is stupid.
Chris, what's your take on this? Do you think there's any potential in this?
No. That's it.
Why?
No.
Why?
No. Same reason these guys said it. Basically, the market cap would be ridiculous. So no. I don't see fundamental value in Bitcoin being that like valuable for no reason. And the US dollar is a lot stronger than you think. There's a lot of other currencies that are pegged to it. There's a reason why the US dollar is the world reserve currency, and yes, there could be a decoupling happening, but that's going to take 20, 30, 40 years. It's not going to be, it's not going to be
100 years.
Yeah, it's not going to take like 90 days and boom, everyone's getting off the dollar. I mean, the question that everyone should be asking is, what interest does this guy have in pumping Bitcoin up? That's the key thing. Like whenever someone comes up with these grandiose like ideas, you got to have some good reasoning behind it. And
you know why? Because he's going to dump on you as soon as it's around 32,000 bucks, 35,000 bucks. And how much did he put into it? And he doubled his money or tripled it. Probably doubled it. He's out. He's gone. And imagine he's leveraged, because you can also leverage Bitcoin 100x.
He says, do you believe in Bitcoin or the dollar? Either way, the trade is simple. If you understand Bitcoin, buy BTC and get your coins off exchanges. But if you have faith in the dollar, put your money into short-term treasuries, lock it up for a few months for a few percent, hold all the way through the digital dollar devaluation. Basically, he's saying short-term treasuries are going to mean nothing once hyperinflation happens, and Bitcoin is the only reserve left for any true asset to have value.
Why is he former CTO? Why is he former CTO?
Look, he's a very smart guy. I think he's like PhD in math and all this stuff from Stanford. I mean, he did an 8-hour podcast with Lex Friedman. I mean, the guy is smart.
He can talk for 8 hours.
The guy's a very smart guy. It's just, this is a prediction that I think is going to ruin all your credibility. It's like me saying Palantir will be 290 days. It's like, yeah, it'll get some clicks, but it's like, I know that's not going to happen, and that's going to ruin all credit. And he's a very respected guy in the crypto. I mean, he's a former CTO of Coinbase. Like, the guy is very.
And I think he's going to dump on all those people at Coinbase or whoever's pumping this right now. At around 35,000 with a lot of resistance.
If you were to 10th man this, and we would have said, let's say he's correct.
Let's say it's going on $1 million.
Let's say it's going on $1 million. How could it feasibly?
I think it's going to 2 million. So I think he's wrong.
Huh?
I think it's going to 2 million. So I think he's totally off. He's 50% wrong here.
You think he's too bearish?
He's too bearish.
This reminds me, and someone said, "Oh, look at Peter Thiel." I'm like, Peter Thiel was telling you guys to buy Bitcoin while he was dumping on the side. Don't listen to these like magical gurus that tell you like, oh my God, this is gonna be this is gonna be that.
Well, but it also means very little to them. It could go up or down. It doesn't ruin their lives. The only people's lives are ruined are who are following this guy.
If that does happen, El Salvador becomes the world superpower.
Exactly, because they invested in Bitcoin, right?
El Salvador becomes.
I totally forgot.
You're right. And Michael Saylor,
all their money's in Bitcoin. All their money's in
I know.
Bitcoin.
And Michael Saylor, basically, his company can buy every other company
with mega yachts.
Yeah. Anyway.
Okay, so then let's move on to UBS buying Credit Suisse for $2 billion, and $17 billion of corporate bonds or corporate debt is now devalued, or it's gone to zero, just because they just got a loan. The Swiss have declared to do $108 billion to make sure this thing goes through. Do we think there is a banking crisis in the United States to the point where UBS has to literally buy Credit Suisse to not go under?
Yeah. Credit Suisse was making a lot of risky bets all over the place, and there was very little credit. What is that thing called? Credit risk management on their part. They were literally laundering money. There was like a lot of shady practices that they were involved with that would have come under regulatory scrutiny. And instead of dealing with that, they just folded. And the Swiss knew that, hey, if this is one of those key banks that has the Swiss name behind it, we need to keep that together. So they basically arranged UBS. I'm pretty sure UBS didn't even want to buy them. UBS would have just said, let their asses fail. But the Swiss National Bank said, listen, you guys got to make this happen. And that's what happens with the Fed too. Like the Fed pretty much orchestrated a lot of the banks being bought and sold in 2008. And they're doing that again this time. Like New York Community Bank just took over Signature Bank. Like New York Community Bank would never do that. They don't give a shit about that. But the Fed said, hey, we need an orderly liquidation to happen. And we need another bank who's actually strong to take over so that this way we can liquidate this in a more segmented way. So yeah, this is one of those things. And what did it go for? $2 billion when it was trading for $8 billion market cap. The people who got conned into this are the Saudis, the United Arab Emirates, because they threw a ton of money at them in October. and they were losing their money, and they went back to the Saudis and said, hey guys, do you have a little bit more money that we can get? And the Saudis this time just said, nah, we're good. And the minute they said we're good, everyone was out. Everyone started dumping.
Okay, Vitaly, do you think a banking crisis is going to destroy the United States?
You know what? If it didn't destroy us in 2008,
Yeah.
why would it destroy us now? I just don't understand. The banks are much better off. They're much more well capitalized, the big banks at least. So I don't see this problem that's happening right now. I just see a consolidation, of course, from the idiots, from the stupid people to the smart people, as it usually happens in the markets. Same thing is happening. I don't fear the American economy, the American dollar going away anytime soon. I'll be long dead. I'm not worried about this.
Long dead. But I also
Long
think
dead.
what we're seeing is just an overreaction to it. Like, from how I understand it, these do not affect standard, like normal deposit accounts, like normal people. I just think that I think that there's hearing the word bank or seeing the word bank and a lot of retail
Bank failure.
right? Yeah, bank failures. But there's levels to this, and from what I understand, part of the reason why this bank in particular got in trouble is because most of the accounts were well in excess of what's FDIC insured, and so, like Chris is saying, if you do stupid things, you get stupid prizes, right? So you make some stupid, risky mistakes, you build things up in a house of cards, the legs get taken out from under you, and they lost a bunch of money. They owe a bunch of paper money,
So there's a couple of major issues with the banks that we have. So 2008 and now, there's two main differences. In 2008, you had a lot of lending practices to people that didn't deserve those loans and could never pay them back. So that was the main issue. This time around, it's a complete opposite, where you don't have an issue with credit quality. You have an issue with liquidity. So the problem is these companies, these banks essentially bought all these treasuries and mortgage-backed securities, right, as a long duration asset. So basically they're holding all of these things to maturity, which the maturities are like 15 years.
So I don't understand why they would buy 1.5% interest over 10 years and consider that a good deal.
Okay, so this is what happened, and this is where you have to understand how Silicon Valley Bank and First Republic work. Number one, they don't cater to your average consumer. They cater to the wealthy, right? So rich people. If you look at the average depositor size at First Republic, it's about $3.3 million in net worth, right? So one of the ways that they were basically making money is saying, look, you take your money from your business, from your personal accounts, you deposit it to us, right? And we will give you a loan for 1.5%, 2% mortgage so that you can buy your $50 million house. You can buy your $20 million house or $10 million house. And that this way, when you sell it, the carry is amazing for you. And on top of it, we'll do white glove service. So basically they'll have champagne openings at closings, and they used to host like all sorts of parties for you. But basically it was a slush fund for the rich. The rich would keep their money there. They would get really good rates on their loans, right? And these were long loans that were amazing for the rich person. And Silicon Valley Bank would make their money on the spread, which is by getting 3% return on the treasuries at the time, which was good. If you're lending money at 1.5, the rich people are basically, risk-free. So you don't ever have to worry about them defaulting because they got a ton of assets. You are actually willing to accept less return because you have a really good thing. Now, on the other hand, the way that you make money is that you have to really push yourself for those deposits. Like you need billions and billions and maybe even hundreds of $billions in deposits and hundreds of $billions in treasuries in order to make good amount of money. So they were basically this was their income. They were making $4 billion a year in net interest income, and they were only paying out maybe like 1 or like 100. I think at one point they were paying like less than 200 million in interest charges. Why? Because if you have to pay interest charges to the rich person's going to get their asses taxed. Imagine right now you're a rich person, you have $5 million in a bank, and if you get a 5% return, right? You would end up getting what is it, like a 5% return on 5 million is like about $25 million, right? Of not 25 million, sorry, $250,000 of return. It's better that you just have a mortgage that you don't have to pay a lot of interest on, and instead you're getting less interest, so it's not being taxed, right? You understand what I'm trying to say, guys? where basically it's like if you don't get.
I think you're trying to say they were taking a loan in order to avoid paying taxes on any interest they made because loans are tax deductible, meaning you don't have to pay taxes on that. But I still don't understand if they're making a spread of 1.5%. That's what they're making, somewhere there. And then why would you put it in for 10 years? Because that's the lowest form of a return.
Most banks were actually doing that, like 2-3%. Because remember, when interest rates were like at the Fed,
right? But why would anyone lock it in for a decade?
Well, see, it's the problem isn't that you lock it in for a decade. The problem is you don't take any hedges against that. Most banks right now, if you go and you ask them like, okay, what mortgages do you have? What treasuries do you have? They have a lot of treasuries that are negative yielding. That's why if you look at that chart that shows you negative yield, like hold to maturity, like negative losses. Yeah, that's true. They actually have a ton of assets that are in the red right now, but they also have a ton of hedges that they bought as insurance. So, and it's something called a swap. So basically what happens is if the new interest rate right now is trading at 5, the counterparty agrees to make you whole by giving you 2%. So just because you have a 3% fixed rate return for the next 30 years, right? But you can buy something called a hedge. So the problem is the margins on Silicon Valley Bank were so thin that they didn't want to buy these hedges. They said, look, we don't need to buy these hedges. These are rich people, et cetera. They're always going to pay their shit. And then the interest rates will never go up. So that was dumb on their part. And also the Fed screwed their whole business model because they started raising interest rates so fast that they could not get into those hedges. Like the hedges right now are super expensive. If you try to buy a hedge on that's just how it is. Like if you take the risk of, and it's something called duration risk. If you lend out your money for super cheap for like a short period of time, it's fine. They'll reset. You'll be able to, get your money back, and then you'll be able to loan it out within a short period of time at a much higher rate because that's what the rates are now. But when you give your money out for long duration, it's bad. So that means that you also have to pay those hedges also. You have to buy additional insurance to cover that. They didn't do that. So that's why they got all fucked over right now.
So, okay, why did they actually break it down the last bit? Why did they actually go bankrupt? Because if they're giving rich people loans for 30 years at 1.5%, right? And they're taking 10-year treasuries at 3%, and they're getting the difference. Technically, they got a 30-year loan to pay off. They're getting more. Still, the 3% is still coming in. They're only paying 1.5%. So why did they actually go bankrupt?
Because these rich people pulled all their money from their deposits, right? All at one time. So basically now,
they only pulled it because they thought they were in trouble. But why would they even be in trouble?
Well, but also they had to pull it out because they were overvalued startups.
Well, hold on. There's also the other thing too, is that rich people at the end of the day could get 5% return on their money elsewhere. And at the same time, they were like, they didn't want
so
to
we're
be in a
leaving.
risky
We're going
position.
somewhere else to get 5% because you can't give it to us.
Yeah.
And they weren't ready for that part of it, the actual pulling out of deposits. Okay. So it was a bank run. It was a bank run.
Yeah, it was a bank run. It was a bank run. And basically once that and then once that happens, now they have to go into the market to sell these mortgage-backed securities and these treasuries at a loss, right? And basically realize that loss. No one in their mother is going to give you full par value for a treasury yielding 1.5% for the next 10 years or a 30-year mortgage yielding 2% or 3%.
Right.
No one is going to do that in this
when the world's at 5%. And then they have 2%. I get what you're saying there. Okay, so it's just a conventional bank run. But if people weren't pulling their money out because to go to another bank to get more interest, then this would have never happened, basically.
No. Yeah.
Right. So they were just foolish. Obviously, expecting interest rates to never change. I mean, what is the expectation here? I don't even know.
One of the things is if you go to Silicon Valley, they didn't have a chief risk officer for 8 months. The last chief risk officer left in April of 2022, right when inflation was starting to go up and monetary policy was changing. They didn't bother hiring anyone until later this year, I think in January. And by that time, it was too late. That CRO ended up probably saying to these guys, hey, we should probably sell some of these securities, even if we have to take a loss. And the minute that they did that, confidence was broken because what happened was people just started asking, wait a second, why is Silicon Valley Bank selling off $2 billion, $3 billion of securities and taking this massive loss on it? You remember when Goldman Sachs bought, I think, $21 billion of those assets, but they ended up getting I think a $2 billion discount. But they were treasuries essentially. So they're safe assets as long as you hold them to maturity. But the counterparty is going to ask you for a discount on the face value of it.
Of course.
Yeah.
Well, basically, they're shitheads. Okay, I got it. They're just terrible managers. And honestly, this is capitalism. This is the way it's supposed to work. I think the issue that brings it up to us is that the Fed is again bailing out this FDIC.
Well, here's the question this week. What is the Fed going to do? Are we going 25 or 50? Or are we pausing?
Well, forget about that for a second. I'm saying right now the Fed has basically instantiated that there is no 250,000 limit for anybody because Etsy had like $400 million in the bank.
Roku.
Whatever. Etsy also was there, by the way.
Oh, really? I didn't know that.
However much so all those hundreds of millions of dollars, they're like, don't worry about it. We got you. That's what the Fed
I just want to clarify one thing. Jay Kim says SVB had over 50% start. Yes, Silicon Valley Banks was primarily catering towards startups that had like this insidious relationship with a whole bunch of VCs. Like if you really want to deep dive into it, listen to the last week's All In Pod. They describe it a little bit better than I can. FRC, on the other hand, was the slush fund for the rich people. So if you were rich, you kept your money with First Republic. They gave you white glove service and they gave you low mortgages to keep your money with them. So they're two different things. Silicon Valley Bank and First Republic are two different things.
Okay, I'm going to read one comment. Timmy Popple says, screw the banks. Let's talk about anything but these shitball banks. I agree.
Well, but I think the question that is the biggest question is what is the Fed going to do? Like, does Powell get a little bit more scared of going 50 basis points because of all the insanity that's going on? Because him raising rates hurts the banks, right? Like, that's not a good thing.
Well, absolutely, because there's going to be a lot of banks that are uncovered right now that are even more uncovered than they are right now that are going to get revealed. Like we're only seeing the first salvo of bank failures at the current rates. The more you raise rates and the faster you do it, the more likely it is that you're going to break more institutions. And the minute
do you think Powell gets that? And do you think he slows down?
Yeah, absolutely.
You're saying no raise.
No, I would
25.
I would say 25 just because it's already out there. But if inflation was under 6 at any point, you're going to see a pause. But I think believe it or not, I think this is the last rate rise we're going to get for a long time. I think after this, we're going to get a pause.
Well, no, I agree with you. First of all, I think there is probably a quarter base, but it doesn't matter. Quarter, half, it's done. I think all of this bearish talk and inflation still going up. Back to reality. It's all done. It's all going to come down, and it might take a year or two. I'm not saying it won't take some time. It's not just going to come down immediately. But if we're not buying equities right now, as even Chris said on Twitter, I don't get what you're doing. I don't understand.
So you don't think S&P to 3,000, basically?
So I'm saying that
even if it does, let's say it does this year, do you think it's not higher next year?
I would. It just means this would be a horrible time to buy right now.
No, it doesn't. No, it means, look, are you going to get some bottom? Do you have some magical crystal ball that I don't have?
It's in the spinner. He asks the spinner.
He asks, go ahead, spin the white circle.
Just get an 8 ball. You remember the 8 ball? Should I buy this stock?
The problem is we don't actually know where these things will end up. Who knew that Meta would even hit 80? If that was in my crystal ball, I would have never bought it $200. That wouldn't make any sense.
We'd have never bought Tattooed Chef. I mean,
we'd have never bought Tattooed.
You guys bought Tattooed Chef?
We followed Jeremy into that a little bit. Thank God we got out at 15.
Wait, you guys actually followed him into that? Wow.
Well, we were trading back just like everybody else was trading. We were doing speculative stuff.
In that market, in that market though, we
bought Ginkgo Bioworks, I believe, at some point.
What did we buy? We made a bunch of money on BioNano,
BioGenomo.
So
bingo,
when I did
BNGO, we made a lot.
I heard about Tattooed Chefs. So I was like, oh, you know what? Let me try the food. Maybe because if the product is good, maybe they'll make. But I tried it. It was horrible. It wasn't that good.
I like the food. I like the food. But honestly, that guy, I won't mention his name, Jeremy Laforet. I was watching a podcast, by the way. Someone said Jeremy LaFufu.
Yeah, there are some people that call him that, but I think that's interesting. So you think it'll be 25, Chris? I was almost guaranteed it was 50 2 weeks ago. Everyone thought, but
so let me just say one thing.
The food is shit, says Swimmer Shark.
Just because the market is likely to go down doesn't mean that every single company is willing to go down. I said high classing your portfolio right now with great companies when everyone is selling them is the opportunity that you're looking for, where people are willing to give you a discount because they're like, oh, everything is falling apart. Let me sell this company that's still generating a ton of free cash flow, that's an essential business, that has
Enphase.
really good management, whatever you want to say, Enphase, I say Google, you know, all these things.
Google too.
Yes, the market could sell off and these companies could go down a little bit too. I'm not saying they can't, but the opportunity that you're going to miss by waiting until everything recovers is way higher.
Oh no,
So
it's gonna be too late.
Yeah.
Like if you have your opportunity, I would say it's now to the end of the year. There might be something that happens, but oh god, what are you waiting for? It's already down 50% plus. Like
yeah,
I don't know what people are waiting for.
You should also be looking for the next generation of trends that are coming and which companies are going to stand to benefit from that. Like we all know AI is going to be a big part of our lives coming now, right? It's like in 2008 with the internet. Everyone and their mother's like, oh my God, internet's gone. Like not 2008, sorry, in 2001.
Yeah,
oh my God, the internet is dead. It's complete bullshit. Well, guess what? There's other companies in that whole segment that were amazing companies that you were using every day. Buy those companies and sit back and relax. That's it. So right now it's the same thing. You see AI happening, right? So I didn't follow Vitaly into Nvidia, right? Because I wanted to give it some time, but look where Nvidia is right now. And I know there's a lot of people shorting Nvidia saying, oh, this is definitely going to go down. This is definitely going to, y'all been saying, you've been shorting Nvidia since 200. Congratulations.
Yeah, but Nvidia is definitely going to go down, bro. Nvidia,
dude, they've been shorting Nvidia since before it 5x'd. Okay. Okay.
Yeah, but Nvidia guys, like I can't be the only one who thinks Nvidia is ridiculously.
It doesn't matter. Good companies that are profitable are always overvalued. This is what you guys don't.
Yes, but Nvidia is ridiculous. It's like Tesla at $1 trillion. It didn't make sense,
dude. Tesla. Forget about the trillion. Tesla was thousands of PE. Amazon was thousands of PE. When you look through their history, okay, thousands. No value investor would look at that and say, I need to buy this.
I get it. I'm not speaking from a value investor standpoint. I'm speaking from someone who's fucking logical. Nvidia is overvalued. Like it's not. It doesn't take a.
You know, I'm not saying it won't go down in the interim, but it is not long term. Everyone knows Nvidia is $1 trillion.
Yeah,
everybody knows this. It's not even a secret.
At 260, it's a bit much.
Okay, it's fine. At 500 billion, you don't want the trillion, so don't invest in it. That's fine.
What do we think of hedge fund manager Ken Griffin getting more money in compensation than UBS paid for Credit Suisse?
What do we think about your boy from Palantir making more money than Tim Cook?
Ken Griffin makes. Yeah.
Well, why does Karp make more? We discussed this. But why does Karp make more on his perks than Tim Cook
makes on salary?
You realize that's all stock. Salary. That's not cash that he owns, right?
Like, no, he has perks. He has like $3 million in perks, and Tim Cook makes like
so he can't make $3 million in perks. That's it for protecting Ukraine. He's not allowed to make $3 million. I mean,
okay.
Well, okay, but I'm just saying in terms of what value brought to versus value.
We don't have to get into this conversation because this is a whole debate.
Well, I just wanted to point out that you're bringing up this guy. Why don't you bring up your own guy?
Yeah, I think his point. I think Vitaly's point is that each company sort of decides what that value is on their own, right? In terms of him making that compensation.
Yeah, I just think it's not a big deal if Karp makes $3 million. Like I don't know what you guys are angry about when it comes to that. But
I'll let you guys know. Ken Griffin is probably one of the smartest people on Wall Street, and he probably deserves every point of every dollar that he's getting because he's able to navigate and build a business that's generating significant amount of ROI. I'm not opposed to paying person what they're worth. Karp, on the other hand, that's debatable. I would say performance-based compensation is way better than having just, oh yeah, we're going to give you money just because you're this guy. Like, no, like imagine Elon right now. Elon Musk had all the incentive in the world to get Tesla to where it is. So if you got to pay the dude a few $1 billion, go right ahead. You want to have shareholder alignment. If you tell me a CEO says, yeah, don't pay me $1 unless my stock 5Xs, I'll be like, sure. That's the company I'm going to buy because now I know the incentives are 100% aligned with my benefit.
And who else does that besides Elon Musk? Name one other CEO that you think does this.
Anthony Noto.
Well, you could argue, and
he's getting paid. He has a salary, right?
Yeah, it's like $1 million. It's nothing real. Like he's putting all of it into SoFi stock every week.
Tim Cook's salary is very small. He makes like $1 or $2 million in salary and 800.
Tim Cook just took a pay cut because Apple made like you know, $20 less. Like, I don't know what they made less, but Tim Cook actually took a pay cut. Karp is like, you know what? Let me sell some shares, and I want more. I want more stock options.
But guy, again, you can't keep spreading misinformation. He sold for taxes. There was
my
no
job.
profiting.
That's my
Hold
job.
on. Amit, here's a
That's
question.
my job on the pod, to spread misinformation.
Like every time
Here's
you
a
say this, it's like
Amit, you got to get off of this. Oh, he sold for tax purposes. The guy
is
has
idiotic.
sold. He has $1 billion in cash, and you're saying every time he sells shares, the reason why he's selling it's for tax purposes.
No, but hold on. Don't. No.
Yeah.
I agree with you, Chris, that he should be taking his own money like Noto and buying shares on the open market.
But he's not.
I agree.
He's not.
But hold on. He's not selling for a profit. He's selling for the options for his tax. That's why you can't just blatantly lie.
When I sold my Palantir, it was definitely not for a profit.
That is lying. Like,
Didn't he vote?
I only lost 50%.
Take 100% of the profits to himself.
Yeah.
Again, I don't get what you mean by he's making profit. He is selling to cover his tax options. The
No,
day he sells for a profit, I'll be the first one to report it. I'll be like, oh,
Yeah.
he sold, and
So
he-
Johnny's
like
saying,
Shams Anchor, Shams sold for a profit. He sold 50,000 shares at $8 2 weeks ago. He made 400 grand in profit. You don't see me
Look,
defending
man.
that. I'm like, he sold it at 50,000.
man, that guy does not buy any of his own shares in the company when it's down to $7. That tells you a lot. Okay. There's only one reason somebody buys stock in their own company, and that's because they think it's going to go up.
Well,
this guy
also,
hasn't
if
bought
you-
$1.
Hold on.
No,
If
you hold
own-
on. You hold
Oh,
on.
no.
This guy hasn't
If
bought
you own
$1.
6% of the company already,
Dude,
there's
if I knew
also,
that
like,
stock was going to the moon and I own 6%, I would want 10%.
Yep.
Okay.
Yeah.
And
I'm just
Noto
saying,
is buying his own company.
then you get into someone's personal finances. and
Noto is buying
a
his own
dangerous
company.
place to get into when you're talking about
Okay,
people.
but okay, you're saying if your company's on the public market, Aldea's on the public market, and it's well below, say, its initial IPO, and you really think it's going to the moon, you have that insider information, you wouldn't buy
any?
If I have a wife who wants Louis Vuitton every day,
Come
for,
on.
like,
Oh,
and
so
then I
Noto, the
Karp
philosopher?
is
Come on.
unmarried, doesn't have kids. Motherfucker
doesn't-
lives in the hut in the middle of
doesn't take
Delaware or New
showers.
Hampshire or something. You know.
all I'm
He
saying
writes-
is when we
he writes poetry every day.
There's a reason you're not going to say how many Enphase shares you have because it's personal. You don't want to like. There's
No.
personal
But
Karp
when
funds,
Enphase
right?
goes down, I want more of that company. I want to buy more of it. And in fact, Enphase, the company itself, is buying more shares of its
even
company.
tell me how much your steak dinner costed tonight, and you're criticizing a CEO.
Well, you really want to know how much the steak dinner costs?
How much did it cost?
It's $500. Okay, the steak dinner is
You
$500.
paid $500 for dinner.
It's for a family, buddy. I don't know if you've been in the world, but when you have a
How
family
much
and you have
money do
people-
you really have?
Oh my God.
Dude, for
Very
a good steak, it's gonna run you like
Dude,
at least 75 to
also-
120.
and also-
have you ever been? Have you ever
You're
been in the
looking at-
world? Man, what a good.
You're
Three
looking at
Enphase shares. My
yeah,
guy.
but you're looking at a 45-year-old man's dinner expense from the lens of a 25-year-old.
I'm not 25 years old. I'm 45. I've earned that $500 steak,
That's what I'm saying.
and it wasn't one
Hey,
steak. It was like
$500.
4. Okay.
Okay. Anyway, TikTok. Do we think they're getting banned officially?
You know what? I think all along I thought Chris was like, obviously I'm a meta bull, but I thought TikTok, no way it's getting banned. And Chris kept saying it's going to get banned, it's going to get banned, it's going to get banned. And he kept sending the links and sending. I'm like, holy shit, they're going to get banned. This is happening. It's happening. I think next year, this year.
Chris, you think it's happening? You think it's official?
Unless it gets sold, it's definitely getting banned. Unless it gets sold to like a US buyer. But even then, the Chinese will never let that happen. The Chinese will just say, no, we're going to veto it. That's it. And at that point, ByteDance is going to be stuck between a hard and a rock place where the US says, unless you sell, you're going to get banned. And the Chinese says, unless you don't sell, we're going to basically mess up your Chinese operations. So, yeah.
I think I mean, all this evidence coming up that keeps coming up, and now they have it in the Senate. Is that what happened last week? A couple weeks ago? They
Yeah.
actually, I think it's getting serious, and I see no reason why now they wouldn't ban it, because who did they ban? Huawei, like a couple of years ago.
Yeah.
Why wouldn't they ban TikTok? Same thing is going on.
Yeah. And now all of a sudden you're starting to see other countries. The UK just banned it in all of their government devices also, right?
Oh, wait,
now-
hold on.
It is a matter
Yeah.
of that is a matter of national security.
National security. So now all the Five Eyes are probably going to ban it as
Yeah.
well. And then it goes to like the local level. And like I said, everyone here knows how poisonous and cancerous TikTok is to like society. As bad as like some of our other social media platforms are, TikTok is probably the worst because it literally fuels like the most ugly parts of our society. So I'm glad.
So following up on that, Chris, what do you think about the Trump arrest that's likely going to happen by the Manhattan DEA?
It's not going to happen.
That's
not
BS.
gonna happen.
No,
I don't
Trump
even
himself
believe
said
it.
he's going to get arrested.
Yeah, but that was
Yeah, but-
preemptive. That was
But Trump is
preemptive.
like he likes to cause controversy. That's
Yeah,
exactly what he would do. He would say,
he
If
just
he gets
the fact
arrested,
that
what
we're
do you think that happens to the market if he gets arrested?
okay.
nothing.
First of
No one
all,
will care.
first of all,
You could argue that part of it is a distraction.
yeah,
Part of it is like the timing of it is a distraction because Americans can only be outraged about so much at a time, and this sort of takes up all of the space in the outrage part of
Yeah.
your brain to leave very little to look at what's happening on the financial
yeah.
side.
Do you guys remember Dave Chappelle where he was talking about like every time Michael Jackson used to be like the fall guy when the economy would be fucking up? So it'd be like, hey, Michael, listen, we're going to need you to touch a kid again, Michael. You got to help us out. And so the story would shift from the economy is bad to Michael Jackson just
Michael
touched another
Jackson,
kid.
Trump has been that for the last few years. They just keep stringing it along. We'll
Like,
arrest him this
dude,
week.
enough
Then
with this
Powell
hooker,
has his
dude.
speech, and then wait next time.
You know, some people on Twitter were like really going hard on Donald Trump. I was like, dude, if you know it was illegal to pay off hookers to not tell your wife and your company the shenanigans that you've been running in the background, half of Wall Street and 2/3 of Congress would be in jail at the same time.
That's true.
You
I
know.
know he's got a valid point. Yeah.
Yeah, apparently this is because I don't even get the case. He paid Stormy Daniels 130 grand, and now he's going to go to jail for that. I'm like, okay.
Well, I
guess
think it's the under oath
campaign
thing
finance.
that gets him into
It's the
trouble.
financing of it. It's how they always catch these guys. It's not necessarily
Financing or under oath. I forgot what it was.
where did the money come from? Did you use like campaign?
Oh, right,
Campaign
campaign
funds.
funds. It was
That-
campaign.
No, but he didn't. So Trump didn't use campaign funds. What he did was he got his lawyer, which is Michael Cohen, to pay
Another
her,
idiot.
and then he paid Michael Cohen, and then he expensed it as a legal expense.
What a,
That's
what
what
a
it is.
he's so cheap.
he didn't have 130 grand to just. Isn't he rich?
No. He had 130 grand. He just didn't want to like show it in his income taxes. So he just said, "Oh, look, I can expense
Look,
my
it's-
legal." So
right.
basically, he got a discount on paying off Stormy Daniels.
Right, a 30%
Get a deal.
He
He makes a deal even with.
He always makes a deal.
Dude, did you guys see like the deal that he made? Okay, so his first wife, I think Ivana, he buried her in like a part of Jersey that he owns, right? So now the entire
buried her?
place. Yeah.
She dead?
She died. His first wife, Ivana, she died,
Oh,
right?
okay.
So he basically took her and buried her in his estate in New Jersey, and now technically that
It's a
estate is considered a cemetery and is tax deductible. Like he
Look,
buried his.
you got to give it to him. He figures out loopholes, man. So I totally respect that. And he's the funniest president we've ever had. I'll admit to that.
That's hilarious, bro. That's hilarious.
Yeah.
All right, I think that's pretty much it this week. You guys got anything?
Hold on, I got to show you guys this because this is just too funny, man. 1 second.
Also, by the way, someone commented I should have made this argument while we were talking about Carp. Elon sold a crap ton of shares.
Elon made everybody billions of dollars.
That's the difference.
Yeah, but he sold
That's
at
the
the top,
difference.
and
No,
he made a lot of people bag holders.
The difference is
So-
No.
he waited until everyone else.
He waited until everyone bought at the top.
Dude, if you took your company from like $2 million to $1 trillion, are you telling me you're not allowed to sell any
No,
shares?
I'm just saying you guys are getting mad at Carp, and
Well, you're
Elon's
doing-
literally
wait,
getting people to
hold on,
hold
you're
the bag
comparing
for him.
Carp to Elon.
Oh, by the way, Elon publicly said he wouldn't be selling any fucking
Oh yeah,
shares.
yeah.
He
No, I
sells
agree
all
with
of
you.
them.
He is a dick.
That's the problem.
There.
You guys are criticizing Carp, and then you got Elon
You
here.
can't compare the two. One
Fair.
is executing at a super high level,
Exactly.
making money for his investors. The company's printing cash right now as we speak, and the other guy's just lining his pockets. And the investors have never made money in 20 years.
Yeah.
Okay,
And
20 years.
every time you try to call him out on it, it's always, well, these are contracts like this. I can only speak so much publicly. It's a perfect smokescreen to never be held accountable, but also dangle the carrot of future gains while you're at the
Right.
same time
Buying,
diluting.
buying Twitter for $44 billion was great for Tesla.
I gotta say, the problem is that Amit has built his whole branding around Palantir, and he's chosen. The
I will
wrong
not
horse.
let this die.
He will not
guys.
let it die.
There's a certain amount of that, but I don't know this for sure. But I think Amit sees himself running Aldea as very much like Carp. I think there's a certain personal.
I do look up to
and
Carp
he
as a
feels
CEO.
to Carp, and if
shouldn't.
Carp,
Because if
whatever-
I ever see a letter like that, I want my $10,000 back.
It's personal. That's how I see it.
Yeah, the minute you start quoting German philosophers, take me off as your lead investor, dude. I'll just write that fucker off.
Yeah.
Hey, share this thing that I just sent you here. 1 second.
Of a burial plot at the Trump National Golf Club in Bedminster is raising questions about the Trump organization's taxes. According to the New York Post, the burial plot is Ivana Trump's final resting place. And as News 4's Chris Glorioso reports, that could have tax benefits for the former president.
It is unquestionably a golf course, but is it now a cemetery too? The New York Post now reports Ivana Trump's gravesite is a stone's throw away from the first tee box at Trump National Golf Club in Bedminster.
Was that too soon?
If this is the final resting place for the ex-president's ex-wife, that could convey tax benefits in the state of New Jersey.
I think what really grabs people about this story is that it involves the two perennials, death and taxes.
Dartmouth sociologist Dr. Brooke Harrington studies how wealthy people shield their money from taxes. She saw reports of Ivana Trump's golf course burial and looked up New Jersey's cemetery regulations. It turns out designating your property as a cemetery could provide exemptions for property taxes, income taxes, sales tax, and the collection of judgments.
This is a perfectly legal maneuver. I can't say if former President Trump will avail himself of it, but if someone wanted to do this,
of course he did.
Designate part of the property they own as a cemetery corporation, in principle, you could do it and it wouldn't break any laws.
It's not clear if the Ivana Trump burial plot represents an effort to turn part of the
We all know, dude, this guy turned his ex-fucking wife's death into a money-making business. This is the level of fucking, like, I say what you will about Donald Trump. I fucking love the guy. He does everything that he's doing is legal. But the minute, like, just dude is using his
I don't know about
ex-wife.
that.
No, dude, I love the guy.
Well,
Man. I
he's
love the
coming
guy.
back to Twitter, and I think DWAC, the SPAC, is in some trouble as well, because when he comes back to Twitter, that SPAC is over.
What didn't he have? He had an exclusivity deal with Truth, and it does expire, right? Don't they know?
I mean,
didn't he have a deal with
I don't
them?
even know how that makes any sense, because like,
can't
he
go on
is
another
Truth
platform.
Social. There's no exclusivity deal. He
Right,
is the
he
app.
is.
Like when he leaves,
Dude, he
That's
always
done.
leaves. Don't you know the guy? He always leaves. So,
Bro, if it's profitable to Trump, he's gonna leave. That's how he's a businessman. If you're a real shark, like cutthroat businessman, the last thing you're thinking about is, well, I wonder what people are gonna think about me if I do this. Nah, dude,
well,
it's all
not
about
what
the
people
business.
think. He raised money for this SPAC. These are shareholders that,
And
bought
he
it.
also sold steaks. He also started a school that went under.
Yeah,
Come on, man.
That's true.
As a business person, the last thing that you need, like the best, I think the minute you have like morality in your bones, that weakens you as a businessman. The best businessmen I feel like are the ones that can probably, like, what's the word, bend morality to their will. And that's what Trump has always done, right? And he's successful at it.
agreed. Before we end, I did want to share this chart because we never went back to it. I've been tracking Enphase for a while, and this should make.
Oh,
Johnny
really?
Boy-
We didn't know that.
Yeah, I've been tracking it for a couple of days now.
You just got into this, right? A couple days ago.
I'm not going to go back in the total history of it, but I just want to point out that in the history of Enphase, whenever it's under the 200-day, this green line, right, and the RSI is total shit around 30 or lower, and I have all these little orange lines that are here. If someone needs to take a screen grab, I have it for a long time, actually. On our Discord, you can find it for longer than this. This was a time to pick up shares. Under the 200-day, RSI in the garbage.
130?
Say it again?
What price is that? The time to pick up shares?
Under the 200-day.
Okay.
You know what the 200 a day is?
Yeah, yeah.
I don't know if you know that.
No, I see it.
You do run a finance channel. I don't know if you know that yet. And the RSI right here is around 30 right now. So, can it go lower? Of course it can. But the history of Enphase is that it doesn't like to stay around there too long before pumping. And that pump can be short-lived, but I'm just pointing out that this happens. So
and this idea that it doesn't like to stay there before pumping, I've noticed that from a non-technical perspective, just as someone who looks at the stock, it runs. Like when it runs, and then that's
because
why
there's a bunch of people. But that's because
so,
there's a bunch of people like Vitaly waiting for prices to come down so they can buy more.
Exactly.
Right? So that's what a support does essentially, right? So basically, the minute you hit a certain price target, there's alerts that go all over the place that people are just like buy.
Orders already in that just execute instantly.
I do have orders already in, but look at this. If it's following this channel and it stays in it, there's no guarantees in the market that it stays in this channel, obviously. But if it does decide and Enphase does do another quarter, I think Q1 2023 is coming soon, in a month or so. If they do that, I mean, it's saying we should be over $300. That's all it's saying. I don't know. We'll see what happens.
Okay, well, I've got.
I don't care if it takes a year, by the way, or 2 years. I'm not in this for 6 months. I'm in it for the long term. But Enphase likes to be very volatile, and this is the time where it's going down, and there's going to be a next time when it's going up. So you can participate or not. That's up to all of you guys. And I'm only talking to the 4 of you here because I no financial advice to anybody else.
Yeah, you might get sued in a class action if you
absolutely
give some financial advice.
Well, at least I'm not pumping Tattooed Chef. that's the big difference, or FTX.
All right. I think that's it for us. This is awesome. Thank you, 228 people, for being here. We appreciate it.
Next week, let's do some research on. I don't know if you guys have ever really done research on what's that electric? God damn it. The electric copters like Joby and Archer. I've been doing a lot of research on some of those, and the tech looks promising. It's a lot more limited use case than than what some people want it to be, which is like the next electric car. I don't think electric cars are going to happen, but there's a lot of companies that have been oversold in that space that are starting to get FAA certifications now, starting to actually do production, and it could be a business that ends up growing to be pretty big, and disrupt some of the industries that we currently have.
It's weird he's moving into all spec now. It's weird.
That's true, Chris. You are getting a little.
You're getting a little. You're like buy Enevix, don't buy Enphase. Okay.
No. Well, that's because when the market is down and there's always this fallacy that a new industry comes, everyone jumps in, the shit goes down, and then people are just like, wow, that industry is completely dead. And it's like, no, the strong ones. Yeah, the strong ones in that industry are going to actually be able to outperform. So take your time, look at them, see who's got good balance sheet, see who's got good partnerships. And if you got companies like Delta partnering with you, you've got Continental partnering with you, you got Boeing partnering with you, Stellantis, like these bigger name companies partnering with your company, they're seeing that whatever you're selling is actually worth.
I just want to point out
to the next level.
The GM partnered with Nikola.
Yeah. Okay. That's definitely one.
There is a counter example there.
Yeah. That's why you do your research, and that's why you also diversify, because there could be multiple winners, right? So just like I said, it could be something that I think this week we could research, and then next week we could talk about. The one that's most interesting to me is Joby Aviation, who has a partnership with Uber. They actually took over Uber Aviation's business. They have a partnership with Delta now, where they're actually starting flights between Manhattan and JFK in these electric helicopter. Well, electric. What do they call electric copters soon? Right? Where basically you can, and they're super whisper quiet. There's so many bullish things about it, but like I said, I want to see if you guys could do some research and see what we all think next week. And I think, believe it or not, right now is a time to look at a lot of speculative companies that are oversold and could be the next generation of winners.
Speaking of
that
spec,
10x.
Wejo ran up 50% after hours on Friday.
Are you sure they ran up because of?
I have no idea why.
Buying? It could be because they're doing that reverse merger with.
No, that happened already. That was done. That was done a month ago.
Was it?
Okay. Yeah.
I think Joby was Kathy Wood pick, wasn't it?
Yes, it is a Kathy Wood pick. Yeah.
Yeah.
It's Kathy stock.
Well, good. So I'll just buy the ARC index.
Yeah, and Joby has a partnership. Yeah, and someone mentioned Joby has a partnership with the Air Force too. So they're actually designing copters for the Air Force to trial and test. So there's actually government support behind them, and there's private commercial industry providing some support when it comes to that. And their market cap is still relatively low for the potential that it could probably provide. So it could be another mode of transportation that people are underappreciating right now.
No, the one thing I'll say is I agree with you that there's a lot of opportunity right now. The problem with these super speculative companies is we actually don't know who's going to win out of them. And it's harder to tell right now. Like you brought up Enevix, it's a little bit easier because the guy behind it is TJ Rogers, who's brought Enphase up. He's investing, he's buying stock right now. Also, they do have the technology that works. It's the scaling that's the problem, right? So I'm not sure if that's the same issue with Joby and these other guys. They're finishing their tech. It's not fully a full platform yet, from what I understand.
No, it's certifications, because unlike some of the other industries, air travel itself is a very let's say a super regulated industry, because you don't want a situation where you're just letting anyone get into the air and then you have, failures happening and people falling out of the sky. Like, so in a regulated industry, you need to prove safety to like the umpteenth level that in other industries, you don't really have to. So that's one of the key things. And like I said, I'm starting to see that level of approvals coming through the FAA and some of the other governmental bodies that usually take a very long time to develop. And so they're finally coming through. So imagine like a drug company, like 7 out of the 10 years that they exist sometimes is usually like research and development. But the minute they get their FDA approval, it's like off to the races. Right. So it's a very similar thing where.
Well, what about scaling? How are they manufacturing some of these things? I mean, we can talk about it next week. But
yeah, so that's the thing. That's one of the reasons why their partnerships with these bigger manufacturers is important, because the bigger manufacturers can provide that industry experience on how to scale a product, right? Because there's other companies right now, they're building helicopters that are very similar components to it, but this one is an EV component into it too. So I'm doing my research on it and due diligence. So I figured that'd be one thing to talk about.
Got it. Cool.
Yeah.
I sent you a link to, someone actually called it out in the chat, but I sent you a link to that company, Blade. They're already offering Blade's great. I mean, actually, a buddy of mine, actually, Joe Vitale, we're thinking about going to NAB in Vegas, and we were thinking like, hey, why would we bother with like an economy flight when we could do something like a jet suite, or we're considering using a service like this, which will get you to Vegas like in about an hour, but it's relatively cheap, 4 or 5 people in a helicopter. So
it's not an EV helicopter. It's just a helicopter.
But it's the idea.
Yeah, but no. Put that back up. There's one thing, if you notice in that picture real quick, show it again. Look on the right-hand side. You see that bottom right? That is a new EV that they're trying to target for. You see right there?
Oh yeah, the small one.
Yeah.
Who is that? What company is that?
Well, I don't know, but that's the thing.
Blade is like the Uber. Blade is the company.
Right, but who are they buying? So whose company, whose plane is that? That's what
either they're partnering with someone, I don't know yet, but like I said, this is the direction that people are starting to move towards,
Oh no, I agree with you.
Yeah.
This is the long game here, but I look forward to hearing more about what you've done research on, because like it's way too spec for me to even like worry about.
Yeah. So this is like for most let's talk about it next week, because it's already been an hour and some change. So
cool.
Amit can't spin that thing anymore.
Right. He's itching to buy Palantir tomorrow.
Oh
my God, I get to buy 2 more shares of Palantir and
no, Ginkgo Bioworks is the stock you guys will wish you had looked at.
Bro, that company, they've been insider selling like crazy, dude.
Right.
There's not
the CEO himself has liquidated his position.
No, the CEO hasn't sold anything actually. The CEO is not selling.
What are you talking about? Michael
CEO
Kelly
sold
sold
other people
everything.
are selling, not the CEO,
Hold on,
everybody else.
Hold on 1 second.
I don't think the CEO is selling from what I saw. Ginkgo is something you're supposed. I would look at it.
Are you kidding? Kelly
cheaper.
You can see Kelly Johnson selling the shit. Hold on 1 second.
His name is not Kelly Johnson. His name is Jason Kelly.
Whatever, Jason Kelly. Here, look.
No, because Kelly Johnson's a different motherfucker. That's what I'm saying.
All right. Well, look at the screen. There you go. There's your boy, Jason Kelly, selling 100,000 shares every time.
Shares is nothing, Chris.
All right, let's go.
How much money
there you
is
go.
That? That's only $100,000.
Look, it's true. It's true. It's 100,000. No, it's 100,000 shares. Look at this. Every single fucking day, almost, this guy's been selling. Come on, man.
Look, I get it, but at $1, you guys want to talk about Enevix spec? You got
prediction show.
Enevix, 5,000 DNA shares at
prediction. 2 years from now, Amit Kukreja is being sued by all of his fans.
I told him not to buy DNA. That was like
it's the dumbest fucking thing in the world to do.
I don't think you guys understand DNA. You guys get just like Enevix is super speculative. DNA is very speculative, but if they pull off even one of the 10 things they're trying to do, it's a double from $1.40. That's what I'm trying to tell you guys.
You bought it when it was $4.
No. I don't. My average is $1.40.
Well,
that's because you
wait till
I sold it back in September, but I got back
every time Jason Kelly sells, you're buying.
I don't know if it gets down to 50 cents. I think ARC-G, we didn't get to talk about them, but their research is actually better than most research firms on the planet for ARC genomics and DNA, Beam, Nutella. Those are some stocks that I would say it's worth looking into. at this level. To not look into it is a little irresponsible.
All I want to say, one more thing for Johnny. Enevix is a spec play. That's the last thing I will say to Johnny.
Yeah, and by the way, I'm with Buttfucker. I'm buying some
No,
TLT,
Fuck
bro.
Bucker.
Bucker, fuck, whatever, dude.
I'm with Buttfucker.
Got you.
I'm with him, dude. I'm buying some goddamn TLT. That's gonna be good too next year, man. So I'm with you. I'm with you, Buttfucker. Give me a. Well, we'll talk on Discord.
Anyway,
Okay.
I agree. Buying gambling is fun. So buying a little bit DNA, buying a little bit Enevix, buying a little bit of this, it's not bad. But at the
Yeah,
end
it's
of
not
the
a
day,
big position. It's not 40% of your portfolio, but it's like if it's 2%.
yeah, exactly. If it's 1% of your portfolio, 2%, I don't think that's a big deal, honestly, because if you are buying Google and Amazon and Meta and Enphase and Tesla, and that's 90% of your portfolio in S&P, then who cares if you lose 5 or 10%? Because the others will save you.
Yeah.
Buy some Illumina. If you're really interested in genomics and everything, buy Illumina, dude. That's where you want to be. Not
No one's
DNA.
leaving. No one's leaving. 193 people watching.
So, guys, how much are you paying in taxes on April 15th?
I don't want to tell you, man.
We pay
It's
quarterly,
bad.
buddy. I don't know what you're doing.
How much are you
quarterly.
paying quarterly? How much are you paying
I'm not
quarterly?
telling you. What the hell?
Why not?
Get out of here.
Why not? You don't want to be transparent as a,
Transparent?
public
No.
figure?
No, nope, not
You get
interested.
to pull up all these motherfuckers selling. on these
We are
sites.
transparent. People who join our Patreon could see our trades as they happen in our public account. It's $5 to join our Patreon, and you can watch us either make or lose
Wasn't
money.
it $1? Did you guys inflate the price? I thought it used to be
Like
$1.
inflation,
Yeah,
man.
supply
5x.
chain issues. Yeah.
I thought it was $1, man.
Be
Oh my
competitive
gosh.
pricing.
And we have a free Discord. For anyone who's not there, we have like 200 people listening. Just go to the Discord, and we talk about this all day as well. And
Yes,
Amit
it's in the
sometimes
description.
Amit joins in. Chris joins in. We all discuss.
I
on there
never
as well.
join in, but
Occasionally, you
bro,
will
I don't
answer.
even join in my own
I-
Discord. I have no time to check Discord, but I need to get better at that.
Yeah, no, you got to do that. You
I gotta
gotta
check more
you got to
Discord.
connect.
Yeah, I'm
All
just on
right.
Twitter. That's where I do most of the connecting. All right.
Yeah.
That's it. Thank you guys. See you next week.
Later.
Peace.